So we have used technical tools to make the area, the zones, supply and demand zones, trend lines, horizontal support and resistance levels, and now we can move forward with the analysis of this bad pattern. So bad pattern has formed here on the uptrend, where we have the potential resistance zone here right on the weekly support level, where the stop loss is below that. And what we have here is a confluence of support, because we have here a horizontal support and the uptrend line, which makes support for the price. So currently we have confluence of support, which is a demand zone where the buyers are waiting. So let's see what has happened around this weekly support level in the past. Let's stretch this one. So in our case, the price is currently in the uptrend. That is one case when the price is going up and then returning back down. In this case, we had the price going down, reaching this price level. So it is helpful to see how the price is behaving when the price is moving down. When the price has reached this price level and also this demand zone, you can see that the price is bouncing up close to this daily resistance level and then return back down. You can see that the price is touching 3 times, and on the 4th time the price has managed to break down this price level on the weekly time frame. So this is a good support level for the price, which we can see it right here. Then in the past, when the price was moving up, the price has acted as a good resistance level. This one also again a resistance level, and then when the price has managed to break to the upside, the price has returned back down, but it was not respected as a good support. Then we have the price going up. It was a small resistance level, and then when the price has managed to break again for the second time, the price has managed as good support. Then in the past, when the price was moving from the upside, here it is, from the downside, the weekly was acting as a small resistance, then as a good support, and here as a smaller support, then a better resistance. So we can see that the price around this weekly horizontal price level is acting as a good support when the price is going down in the past, and also in this area here, because we are currently in the uptrend. So the price means is pushed by the buyers, where the demand zone, which means when the price is going down, this is a demand zone where the buyers are waiting. So it is a good area where the buyers are pushing the price higher and preventing the price to reach lower level. So this is a good area for the price currently, and also this potential reversal zone, which is a great area here, is a good area to enter into the trade. So based on this one, on this analysis, small one, is the price is going up in the uptrend, and it is currently on the confluence of support, which is very good in the past. We can see it here. So for the next one, we can see how the price levels, entry, target 1 and target 2, and the stop loss are located on the chart. First of all, a stop loss is below this weekly and also below this demand zone. So around the demand zone, that means when the price was falling down, you can see that the price has stopped here right on the support level, but we have wicks that have reached lower level. So below this demand zone, in this case, when the price was heading down, the price could not reach lower level. So the stop loss, which is below this demand zone, is on a good spot, because if the price goes here and this demand zone holds, it means stop loss will not be activated. But if the price goes below demand zone, it will mean that this support and the buyers that are pushing the price in this demand zone to the higher level is not so strong, and the sellers are stronger, will push the price down, which means if the price goes here, it will mean it will move down to the second demand zone. So this would a stop loss will be activated, and also a bad pattern will not be valid. But in this case, because the stop loss is below demand zone, it increases the chances that the price will not reach lower level because of this great support in the demand zone. Then we have a target 1, which is above a daily resistance level, and that means you can see it when the price was moving up, the price has reached this daily resistance level, but we have wicks that have managed to push higher and reach this area right here. Then in the past, if you take a look, when the price was heading up, just a minute, we can see it here, the price has reached the daily resistance level. This one again a daily resistance level. In this case the price has managed to push up. So most of the time what we can see, when the price was moving from this area to the upside, the price has reached this daily resistance level. But we have here a supply zone where the sellers are, they are pushing the price down, so there is a possibility that the price will reach this price level with the wicks. But the target is at 21.46. It would be much better to put a target one slightly down here, around 21.30 is enough, because most of the time the wicks are touching this price level. To be on the safe side, always target where the candle's body close or open is. For example, it is right here on the daily resistance level, which is 21.21. So the target one would be much more clear, and this, there is high probability that the price will reach first this one, if not the target one with the wicks. Then the target 2, it is slightly above, but it is between this daily resistance level and this one monthly. So in this case, as it looks, the target 2, if the price manages to close above the first one, which is a daily resistance level, there will be no problems that the price reaches target 2 price level. And that is because when the prices broke to the upside, you can see that the price reversed back down, then bounced from this support and reached higher levels, which is above the target 2. So in this case, if the price reaches target 1 and closes above this daily 21.21, there is high probability that the price will reach target 2. But in a case, if the price reaches target 1, it is always good to move a stop loss to the entry or slightly above the entry level, just in case if the price bounced from this daily resistance level, it will return back down, because you can see what happens when the price goes up, touches this supply zone where the sellers are, the buyers go out from their trades, the sellers get in, push the price down, reach this support level. In this case, when the price was going up, the price managed to make the same scenario, bouncing from this resistance level, moving it down to this entry support level. So we can expect that the price, when it was moving up, it will reach the daily resistance level and then bounce slightly down. How far? The first level where the price will reach is this area, smaller area here, because you can see lots of candles that are touching this price level. So this means it is a confluence price level where the sellers and buyers are fighting for the area. So this is the first level where the price would bounce, but if the target one is reached, it is much better to lock the profits on this trade, on this bad pattern, instead waiting until the price returns back down and goes below entry point and activates stop loss. Based on the risk to reward ratio 4.12, this is a very good risk to reward ratio, because the stop loss is very close to the entry, and based on this analysis I am thinking that this bad pattern will be valid. So entering here, you can make your own analysis and enter into trade based on your analysis. Use my analysis as only an overview from my side how the market looks. So based on this one, I think the bad pattern will be valid, but we will see. Entering here with the stop loss here, the target 1 is very good, so it will be also target 2 as a good risk to reward ratio 1:4. I hope you liked the analysis. If you want to get more analysis, click the like button and subscribe. See you next time and happy trading!